were talking about how mid-cap IT numbers have been very strong this time around. Mastech is the stock on our radar right now. The company posted a decent set of numbers this time. Deal wins were also quite robust. However, sequentially, quarter on quarter, the dollar revenue growth of 2.2% is significantly lower than a lot of its mid-cap IT peers. So you have Hiral Chandrana, who's the global CEO at Mastech, who joins us now to talk about that. Hiral, thanks so much for joining us. It's been a decent quarter, like I said, but the growth rates have been slowing down, and even compared to peers, it's not as high. Can you tell us where do you see the gaps in terms of growth, and what do you see as FY23 growth rates for your company?
Sure. Good morning, Sonia. Thanks for having me. I would like to give a perspective on how we're seeing the results, and we're actually pleased with the progress and optimistic about the future. So if you look at our overall year-on-year growth, it's still sitting at a healthy 24.6%. And even if you take a look at the 9 months for this fiscal year compared to the 9 months in the previous fiscal year, we actually grew roughly about 29% year on year. So from that perspective, the EBITDA margins have been healthy. The order book, like you pointed out, the deal momentum has been very strong. We were very transparent a few months back that we had seen a dip in a particular account called NHS in UK. And those ramp downs have completed in Q2 and Q3. And we've now won some fairly large deals. We actually last month when I was on your show, announced the largest deal in Mastech history for about 60 million. This is where our data intelligence platform is getting leveraged by NHS to help with reducing the reactions for the patients when they go through medical implants. Post that, in the last 3-4 weeks, we've actually won 2 more significant deals in NHS. So we feel that is on a really big uptick, and the UK team has really come back very strongly. Our Fortune 1000 progress has been very strong. We've added a few more clients this past quarter and done some very aggressive hiring. So all in all, muted when it comes to quarter on quarter from a pure revenue US dollars perspective because of some currency impact and seasonality, but looking pretty optimistic when it comes to the deal momentum pipeline and future growth expectations.
Chandrana, hi, good morning. Could you tell us what is the value of these additional NHS orders that you got in the last couple of weeks that you spoke about? And sure. Also, could you tell us what will growth look like? Will it pick up significantly from here because of all that you described is happening at the company?
Sure. The 2 deals that we won, in addition to the 60 million deal, I cannot share the value of one of them. The value of the other one, the NHS Pathways, which we've declared actually openly as well, is roughly about 15 million. So it's a fairly decent sized deal. Our Americas business continues to grow. Our Oracle Cloud business, which was on top of the Evisys acquisition, is really firing on all cylinders. We're starting to see larger deal sizes in Americas as well. A few months back when I was on your show, we talked about our strategic bets, which included, of course, Oracle Cloud, but also data automation and healthcare and life sciences. So if you look at those 3 bets and our focus on them, you're seeing really exponential growth, which again goes back to the strategy that we had put together. So going forward, Prashant, we feel we'll be back at industry leading and matching numbers when it comes to revenue growth. Quarter on quarter as well as year on year.
Okay. Hiral, good morning. You know, unlike the traditional IT companies, which are more US centric, you are more Europe centric company. Of course, you're putting quite a bit of focus on the US. If you could tell us how this mix is going to pan out, or, you know, do you have target to perhaps increase US to say 25% or thereabout? Any thoughts on that?
Yeah, Anuj, so we actually just completed our 3-year strategy and looked at how this business looks over the period of the next 3 years, actually. We do expect UK to continue to grow. However, from a percentage mix perspective, US will start getting into the 30-33% type of ranges over the next 3 years. So we do feel confident about much faster growth in the relative sense. We do have a growing business in Europe as well now. We just opened a center in Romania for nearshore capabilities. So we expect that to continue to pick up. Our Middle East business is a good one, but we are getting much more focused out there. Instead of going after every deal, we are getting focused on specific accounts, looking at account mining and higher quality revenue. And the same with US, our account mining strategy is working. One of the large deals that we closed in Q3 was an integrated solution, which we call the lead to cash process transformation, which had Salesforce in the front end, Oracle back office, cloud in the back, and really some interesting kind of co-sell integrated solutioning deals that are in the mix, which includes annuity managed services as well.
Okay, got that. Mr. Chandrana, the other sort of talking point has been costs, which company after company, yesterday Infosys told us, for example, that inflation is a big issue with most businesses. But the CEO at Infosys told us that he's hopeful there is openness, willingness to negotiate higher pricing as well. Across your client set, what are you seeing?
Yeah, actually, that is true, Prashant. We have seen selective rate increases and price realization improve in certain areas, not across the board, I must say. Some of the on-site rates have increased, and we've been able to get the value for what we're delivering. A lot of our work is actually business outcome driven as well. So we are seeing the benefits of that from a rate perspective. In certain digital engineering and cloud native development skills, which make up a good portion of our business, we've seen some increase as well. It's not commensurate with the cost addition to offset it completely, but we have slowly but surely started to see that going up.
Okay, finally, you have about 700 crore cash on your books. Any immediate plans of using that?
So we, as we declare regularly, we just declared a 140% dividend at 7 rupees per share. So we always do that, doing the right thing for the investors. Our return on equity and capital has been very healthy over the years. We do have some aggressive M&A plans coming up in the next few quarters. We've scanned roughly about 50 or so assets. We're being very careful and methodic about it, but we are making progress on that. I had shared once in the call before. Cloud platforms, data automation, and then CX is really the three areas that we're focused on from an M&A perspective, and it's most likely going to be in the US market, at least the next couple of acquisitions that we do. So definitely, Anuj, that's on the cards, and you should be hearing more about that in our next quarter.
Okay, Hiral, we'll leave it there today. Thanks a lot for joining us, and good luck for the next few quarters.
Thanks for having me on the show.
Okay, that's Mastech. Let's take the 9-10 calls then.